Hello and welcome to yet another episode of Simply inTAXicating on GST. The industry and trade perhaps will be a little upset about the fact that they did not get enough time to give their feedback to the draft GST rules with respect to the business processes, registration, returns, payment, refund, invoice format, input-output matching format, etc. And interestingly, the GST Council at its second meeting approved that draft, and that has gone to the GSTN for doing the rest of the work, which is going to be online very soon. The yet another point with the GST Council at its crucial second meeting decided was they decided to do away with the concept of exemptions, area-based exemption, VAT subsidy, refund, rebate, etc. But the mandate has been given to a technical committee to work out some kind of mechanics for giving refund. Other aspect which has turned out to be, which was a closed chapter in the previous meeting, the first meeting, was the services. It has turned out to be a major bone of contention between the center and the states. Another very vital point where the GST Council is going to discuss at the next meeting, 18th, 19th, 20th of October, that is going to be a matrix of GST rates, whether they are going to be multiple rates. Again, between the essential commodities, the standard rates and the demerit rates. So those structures also is going to be finalized. So we are going to take a look at all these aspects. What are the possibilities in the store? We have three distinguished guests who are going to share their insight into all those developments which are in the pipeline. We have Mr. Pratik Jain, the national leader, PricewaterhouseCoopers, of course, our knowledge partner also. We have Mr. Sridhar, the Senior Vice President, Hindustan Coca Cola, and Mr. S K Goel, former Chairman of Central Board of Excise and Custom. So let me start with Mr. Sridhar, perhaps, that you have gone through the GST rules. All those things are in the public domain. Of course, the final rules will be notified only after the Parliament passes the legislation. These are subsidiary, subordinate rules. So looking at all those things, what are the key features which you would like to highlight here and share with the viewers?
I personally find that the tax formats, the invoice formats, and the GSTR returns which have been uploaded, looking at that, there are a couple of concerns for the industry, and one or two of them we did try to highlight in those 2 days, but then our opinion was it didn't reach the concern forum. One of them, I would straightaway say, is how they would treat advances first and how the appropriation of the supply takes place when the person receiving the advance is not aware about from where the supply would take place, assuming that the person supplying the goods has a different set of plans. Right. So I think like this we have raised about 4-5 major concerns. That was one of the major concerns that I talked about. And the second concern is, which we had looked at, was when we talk about formats like 1, 2A and all. In 2A, there is a download given to the purchaser to talk about and find and do a verification. Okay. And that's automatically, it's auto-drafted, as they say in the formats. Now, we looked at a basic situation. We did a dry run in our organization from the very existing information that we have of the large suppliers from whom we bought goods. Right. Even with this kind of large suppliers, we found that it really takes time, even with an auto-drafted data, for us to confirm. Just because it is auto-drafted, we did a business process dry run, and we found that you can't blindly confirm. Okay. So that gives me the second point. The second point is the time given. I've forgotten the time for reconfirmation. Yes. Right. Yeah. Okay. So that confirmation time in terms of number of data. Okay. Because I think there is one thing that we must also realize: the entire country nowadays looks at auto processing of data through shared services. Whether that can be done even with such an advanced technology also in 5 days. I think these are the two major things I can think of.
Okay. So maybe Pratik,
I just want to add a few things. I mean, overall, the rules are mirrors of the process document which were issued earlier. So therefore, no major surprises. Although only 2 days given to the industry, we hope that it will put up for public domain for proper consultation. There are issues. Sridhar highlighted a few of them. I think on the return side, they should try and simplify this. There's a lot of complications. One of them is state-specific PNL.
Okay.
Now, obviously, at a broad level, the intention is that they want to reconcile the GST return filings with income tax.
Right.
But what it entails is that all businesses will have to actually do a draw of a state-specific P&L,
Right.
which is very difficult. And since the time given to the industry before implementation is short, only 3-4 months after the final act and rules will be notified, one would expect that some of these things perhaps would be looked at in the second phase
Right.
of the changes and not immediately.
Right.
Also, on the refund side, there are provisions for certification. For example, if the refund is more than 5 lakh, you need a CA certificate.
Right.
Now, some of those things again should be looked at. The whole concept of GST is lesser of paperwork and more for self-assessment.
Right.
So whether this 5 lakh amount looks too small to me, and similarly, there are a lot of things in terms of certification and all that which is there as part of the rules. So I think there should be more debate on this.
Good.
And also the fundamental point is that these rules are only few rules, right? I mean, in the Act there are more than 160, 170 references where it says maybe as may be prescribed,
Right.
and many of those rules are not there. Rules for discounts, rule for other things
Right.
are not there as part. Input credit
Right.
are not part as of these rules.
Right.
So when will those rules come? So hopefully they will come up with the entire set of rules and give some time to the list.
Right. What is your take, sir? I mean, like Pratik said that, and when the spirit of the government is to allow self-assessment and keeping a benchmark like 5 lakhs rupees for a CS certificate, etc. To what extent, sir, do you look at it? It's going to create problem for the industry and trade.
You see, the concept is self-assessment and also trust-based, but subject to verification.
Right.
So you find everywhere that you do it, and then later on some verification. For example, if you take registration, just 3 things will be verified, and after that your registration certificate will be issued, and then post verification, if at all, will be done in due course. So the trust-based system with verification. Now, coming to the question of CA certificate,
Right.
you see, we have to see that we are ideally, probably we should not insist for CA certificates in such situations. But now we are dealing with the number of states, 29 states, union territories. There are small states. For them, 5 lakhs is a big amount. 5 lakhs may not be a big amount for center or for some big states like Maharashtra, Tamil Nadu, but for small states like Sikkim, Northeast. So I think we have to take into consideration the concerns of very small states as well, whether it will affect their revenue, because they're all afraid
Right.
that it will affect the revenue. So they do not want to make any compromises at this stage. But once the system is set, maybe then these limits can be enhanced. I think
Okay.
that seems to be my
could
take.
be the
That seems to be
intention,
my yes.
I think in order to do this, I mean, the concept of ease of doing business, whether to what extent it is getting compromised. I mean, there are large MSME sector, things like input-output matching.
Right.
For a MSME sector, it's very difficult to
It's very
do
difficult,
that. So
absolutely, yes.
these are all good things. We're not saying that this should not be done. The question is whether we should do it immediately
Right.
or we should do it little later.
Maybe in a phase
And
manner.
also the road permit, which
right.
is the rules are silent about that. Under the Act draft law, there is a power to have prescribe a transport document with the consignment value is 50,000 rupees. Although for transporters, they're saying invoice is not required to be carried if the invoice
reference number
is
itself is
generated.
right.
To my mind, the tax invoice itself should suffice. Why should you have a prescription for road permit? Because it leads to a lot of issues, and at the check post, and you have to show that road permit and all that. So industry is really looking forward to ease of doing business and lesser of hassle at the check post.
And
Right.
even modern technology related enablement also should be thought of.
Right.
For example, let's look at a basic situation of selling bread in Delhi city. Now, it's a direct distribution model is also possible, indirect distribution model is also possible. When you sell bread to a retailer, it's not necessarily the invoice is cut at the depot.
Right.
You take it to the retailer, you will be having an handheld, and there is no invoice from the depot day when the depot time till the time it reaches the retailer, and then a handheld, if a handheld is given to him, it's cut. So how do we handle those kind of situations? And in respect of refund, there's one point that I thought I should add. Recently, the government issued a circular when things would not be deemed as undue enrichment somewhere in September
right,
with
right.
I think with September 8th as the last date for comments. Instead of waiting once again to carry coal new to Newcastle, you can directly import those points into the new refund provisions, and because that's also been deliberated a lot.
It has been, right.
It's been deliberated a lot, and it can be looked at from a lot of jurisdiction purposes also.
Right. I mean, another point which Pratik mentioned about this state-wise PNLA, how troublesome this is going to be. I mean,
definitely, because all companies which are even decent sized, above 300-400 crores, have gone to a centralization, because we have gone back to the era of centralization. One national business shared services with a common profit and loss account generated there. And of course, the units would have the sales data, but that's all transmitted into a central system with their connect terminals.
Right.
So when you're talking about that, to ensure that you have a complete state-wise PNL, the ask would be there, definitely, in terms of technology enablement. We'll have to rejig the whole process.
Absolutely. So as per the experience of 40 years which you had, I'm sure quite a few studies must have come to your notice, sir. The compliance cost part, like in terms of custom, for instance, we used to talk about dwell time and all those time, and various committees of the FICCI, etc., and the Commerce Ministry used to set up. Here, sir, looking at the compliance cost, how do you look at, sir? All these things are naturally going to add to the compliance cost. The 29, 30 states, union territories, preparing PNLA, and then the centralized data going back, and then the kind of compliance cost. Of course, I'll get back to your a corollary to this later. Sir, you tell me, sir, how do you look at this?
You see, the way we look at it, the way you are looking at it, it seems very daunting. But I think now look at the existing compliance cost and then compare with the potential compliance cost under the GST model. That is how you have to compare.
Right.
If you just look at the compliance cost, you feel it's huge. So many states, I have operations in so many states, and then I have to do compliance. For each state, I have separate registration. For each, I have to file a separate return, anything like that. So it seems huge. But compare with the existing system. Supposing a company which is operating in, let's say, 10 states and center, they are deal with 10 different state VAT laws. The definitions are different, the rates are different, the procedures are different. For each state, you have to have a separate chartered accountant, separate lawyer, specialized in that. Now, at least you have you will have a harmonious law, harmonized structure, harmonized rates, procedures, harmonized value, and also that is applicable also for center.
Right.
So if you look at that way, to that extent, your compliance burden will go down. But of course, some compliance will have to be there, because once you say we want self-assessment. Self-assessment means then you have to report that self-assessment, how you have arrived at a certain conclusion, certain rate of tax, amount of tax. That needs to have a trail, and which can be audited.
Right.
You see, we are not only dealing with the department, we have to deal with the CAG also, because CAG will want to see the trail and go back, and unless the systems provide for that, so that is a daunting task. But of course, if there are specific suggestions, I am sure this is an ongoing process. Whatever.
But sir, the ease of doing business is another focus of the Prime Minister. So naturally, if maximum benefit could be derived by rationalizing the present matrix of the compliance which we are looking for or expecting from the industry,
it can be further improved.
That could be, sir.
Depending on the feedback which the companies give.
Right, sir. Correct. Now I will ask Mr. Sridhar. The one question which came to my mind was that looking at the small islands of compliance, put them together in a basket, it becomes huge actually. Looking at all these aspects, how do you look at from the other side, the law firm side, the consultancy side? This bone of contention traditionally where they had a specialized was classification, valuation, duty comprise, etc., etc. All these things gone. What changes do you look at?
I personally feel the next 25 years is going to be all chartered accountant firms, big 4 or big 6, whatever you like to call them, will have to shift to technology enablement. You may not have a classification dispute. You may not have a fight for a stay. Right. You may not have the case for an adjournment also, where you can keep on getting adjournments. All these 3 things would have to die. And the law and credit would get integrated. So the 4 big areas are going to go away. Right. So the question which you asked is spot on. Where the next 25 years practice will lie is in technology enablement. Can we make life easy for any? I think this is exactly what I would like to put it from the other platform. Let's say there is an MSME he's above 50 lakhs. So he's not a composition.
Right.
So he's about 200 lakhs. 2 crore turnover for an MSME is a big money.
Right.
Now, how do you handle the tax preparer, for an MSME,
Right.
and how do you ensure that he in turn has a good back-end support from the concerned MSME,
Right.
and how he is able to access the facilitation center.
Right.
All tax return preparers, or whomever you like to call them or designate them, may not have a direct access. They would like to go to a facilitation center and upload.
Right.
So must you not connect all the three?
True.
So that is technology enablement, I feel.
Right.
Can we do that in the next 10 months? You forget all the large companies, you forget people above 500 crores. Let's look at people between 50 lakhs and 200 crores. I think the enablement has to come for the small people.
Should we move from the GST rules to exemption part? Do you think, how do you look at the implications of this new decision? Of course, half of it is not yet clear, so that has to be worked out by the committee. But the decision to do away with exemption and bring every sector, every commodity within the tax net, and there will be some kind of levy of GST on them, and then the government working out mechanics to refund them. So how do you look at the implication for the exempted sector?
Actually, the principle from going away from exemption, I think, is sound principle. Because when you have exemption, that means your input tax rate gets blocked, and therefore you have harming. But I think in some cases, government might look at zero rating than exemption.
Right.
It means that on the output you don't charge tax, but on the input you get a refund.
Right.
And one thing, one query supplies to SEZ comes to mind immediately. Because today supplies to SEZ is not subject to excise duty, not just subject to service tax, not subject to CST.
CST, right.
But tomorrow is saying that 18% tax will be levied upfront. That will be a major cash flow issue.
Yes.
So rather than exemption, if they were to convert into zero rating,
Right.
that means supply to SEZ will not be taxable, but you will still get input credit refund as a supplier,
Right.
which is the current model. That might be a better model to start with. Now, if you are doing a upfront collection, then that means a refund processor should be robust. And
Right.
while there are rules which they talk about that immediate refund or a provisional refund, there are conditions attached to the provisional refund as well.
Right.
But if that refund procedure is not implemented properly, then industry will have a big problem.
I don't think so. We need to go outside for this also. I personally feel there is the Code 42 of the UP VAT Act, which came after 1/8/2008.
Okay.
UP came into VAT on 1/1/2008.
Right.
Their section 42 came somewhere around July, August of 2008. They have built a huge seamless process of going in, and the refunds are controlled, and they have an interest provision for delayed interest also.
Okay.
So why can't, wherever there is an existing law or a body available with some knowledge, you pick up that and maybe make it more technology enabled, if that's the only way out, I would say.
Right.
But the larger question would happen for this. This is as far as the central schemes are concerned. Now, what about the state schemes? I didn't see the announcement after the meeting also on the state schemes.
Yeah, that's right. Correct.
So I personally feel still there is some gap in thought on the state schemes, unless the states feel that whatever industrial incentives they will give will continue even after GST.
Yes, they have not committed, but the finance minister in his conference, he mentioned that there would be a levy on every item, and each state will make some budgetary allocation for refund. So probably he is linking it with the compensation side, the burden, how much revenue foregone for a particular thing. This is your baby now. Each state will have to decide. And if you're foregoing that, then it will be deducted from your compensation. Probably, something to the, it has something to do with the compensation part probably.
State exemption will be substantially diluted because the interstate CST which the state collects and refunds you,
Right.
That benefit will be gone because
Gone, yes.
there's no CST.
No CST.
And the GST, they're not collecting that.
Right.
The collection is by the destination state. So that way, in fact, most of the MOUs which have been signed recently, they have a clause specifically that once GST comes in, your benefit or refund of CST will not be there. And then, in that sense, the people who have invested heavily on the back of these exemptions and concessions for 10 years and refunds, there the competitive edge in that sense will be lost.
Right.
And also, today, let's say VAT is 12.5 or 13%, and that amount is refunded.
Yes.
Tomorrow, the state GST component is going to be 8 or 9%.
Yes.
And therefore, the benefit there also is reducing. So, state will have to come up with some innovative ways to find that how they compensate the industry who have already used.
Absolutely. This is being left to the ingenuity of the states now. Center is not going ahead with that. So this brings us to a very vital point which happened, at this last GST meeting. The services, it has always been with you, with the CBEC, with the central government. And now we met the Kerala finance minister the other day, and he was very clear that when we were convinced by the center at the empowered committee, various meetings, hundreds of meetings they had in the last few years, and the major incentive which was promised to them was that you will get to tax services. Now they are feeling a little slighted that this is being taken away, or retention of services by the center is a little unfair to them. How do you look at it, sir?
The only issue was that because in the first meeting, the general consensus, general feeling was that because the states don't have enough experience, so if a time will be taken, couple of years, in which they will get used to implementing GST, and then later on it will be passed on, and for this 2-3 years period,
Right.
let the central government administer. That was but then the second meeting, there was a divergence. There was this issue was raised again.
Right, sir.
So now it is open for discussion in the GST because the minutes have not been finalized.
Right.
Now in the third meeting or maybe subsequent meetings, they will take, but they will have to because the one issue which trade has been talking again and again, and they want single control. They don't want dual control. In the sense, single administration, that I should be administered by one authority, either state authority or central authority. If you are administering by two authorities, there is a possibility of confusion, difficulty, discrepancy, whatever.
Right.
They have their own grievance. So on which Revenue Secretary had also mentioned once that, yes, we will see that the dual control doesn't take place. So that means you have to cross-empower. So SGST can be collected by center, CGST can be collected by states, services can be collected by center, goods can be collected by states. So this is the thing which they have to. It's a political issue,
Right.
and also as you know that on this issue there is agitation. The Federation of VAT Officers, they have agitated this issue.
Yes.
Central Excise Office, Service Tax Officer, I am hearing they are also going to agitate on this issue.
Right.
So it is basically a political issue. Main thing is administration part has to be very clear. Trade, the assessees have to clearly know whether they'll go for dual or single. So ultimately, this is a process.
Mr. Sridhar, looking above and beyond this departmental interest, for instance, state VAT officers naturally, it's very natural for them that they want to expand their own domain if they get services. For centers, similarly, it's an issue. They have been managing it. They are saying that those skills are missing. In a few years, that will be inculcated over a period of time. But of course, as per the Constitution, the legal rights are vested in both. States are demanding that, that this is, of course, it's a question of tax administration where the sir is talking about that, all those things are missing. So probably gradually after 1 year, 2 years, 3 years, they can be allowed. But going beyond all the departmental thing, what should happen? What is the best way out for this situation where the council perhaps could go and follow that?
I personally find that they should look at the state's demand very carefully, because even if you see the structure of the tax today, I'm also a great votary of central taxes, but I feel we are shifting as a nation towards a state tax based situation. Right. The GST has more force in the states than in the center's taxes. I'm not saying anything.
No, of course,
incorrect.
In the national interest.
The national interest
yes.
also, even if you see the voting
Correct.
pattern also in the GST Council, the fact that they have 2/3, that's a very important point. And even in respect of small issues, you need the state support. I will give one more example from the rules which we missed out. For all the existing taxpayers, they're going to give a declaration about their history statistics about what their registrations are by end October. That's the current view we get from the GSTN. My point is, those facilitation centers for the responses from the existing taxpayers, my view is, has to be in the states. It can't be done centrally.
Right.
So let's say I have 20 states where I operate. I'm given a tabulated data. I'll have to go back to each facilitation center which has to be set up for my existing data and take it to those concerned states, and there'll be mistakes in that upload also. So which I need to rectify. So I'm just giving you an example to say that it looks like it's a state-driven thing. So their participation has to be larger. So I don't think there's anything wrong in giving up to 1.5 crores back to the states. Albeit this control, if you're going to make valuation so simple, then I don't think so there would be a dispute, and they are equally capable of picking up the subject of tax on services very quickly.
So Pratik, I mean, as per your experience, I'm pretty sure the globally, the VAT is a system where tax administration generally is a major issue ultimately, because most of the things, once it is drafted well, it is put in place, the rules, subordinate legislation, everything, procedures, etc., simplified. But largely, it's a question of administering it. So, from that perspective, looking at it, this particular situation where we are trying to find a solution, what could be the solution, the best solution for the GST to go for? Because again, the GST Council has mandated it to the some committees that work out some solution. What should be done here? What could be the possibility? Looking at the global experience, of course, our experience generally, our kind of federal system is not found everywhere. Perhaps a couple of countries where we find some resemblance. So maybe
I think power of levy
right,
goes hand in hand with power of administration. I think to say that services will be administered only by the center perhaps is not in line with the initial thinking. That's what states are saying.
right,
From industry point of view, of course, it's good news. There are several questions that are unanswered. First is, if I'm a service tax assessee, I'm also selling goods.
right.
Okay? So therefore, will I be coming under center exclusively, or will I be coming for center for
Yes.
services? And I don't think there's a very large service provider who has no exposure to sale of goods at all.
Right.
So that's one. Second is, when you are saying that capacity building will happen and states will get experience, then we'll have to have a definite timeline.
Right.
1 year, 2 years, etc. I think in the long run, the solution is that both of them will have to administer.
Right.
Industry will have to be ready to be administered by two set of authorities. That's dual GST for you. Today also, if I'm registered for excise and VAT, I'm getting a registered by two set of authorities. What needs to happen, however, is that central GST and state GST law should be completely harmonized.
Right.
And what should not happen, while administration happens by two authorities, what should not happen should be that on same issue, they take divergent positions.
Right.
So on one state says that classification of the product is in this category, and center says classification where the law is same.
Yes.
And therefore, for the initial show cause notice itself,
Right.
there should be some common linkage there, so that assessee does not deal with two independent issues and two independent positions by center and same. But to my mind, to say that industry will only deal with one set of authority is too idealistic to my mind. I think it's not going to happen. May happen for 1 or 2 years
Right,
for
correct.
services. But in the long run, one will have to be ready to be good.
There were two authorities. Yes, I mean, that reminds me when you talked about the HSN, the 2-digit and 4-digit. I mean, there is an issue. I mean, how do you look at
that is with regard to they should not be two sets of approaches for two sets of assessing. If a person is in the GST chain, you want it 4, you say it to 4. You can't say between 50 to 150, I'll give it a 2, and for 150 and beyond. Because goods are goods. Yeah. If it is classified for a 50 to 150 a category trader as X, you can't classify it as Y for a trader who's between 150 to 500. I mean, that doesn't
Right.
look at the overall sense of the whole issue also.
Right.
On this, I just want to add something that maybe the HSN classification needs to be relooked at. Why do you need that?
Right.
Particularly for a trader, on a B2C
right.
service.
Right.
So today, there is no exemption. So even if let's say, I go to Big Bazaar and buy something, they will have to also put an SSN code on the invoice.
Right.
And look at the number of items that they deal in. They would be dealing with 50,000, 1 lakh, maybe 2 lakh items. An e-commerce company.
Yes.
They raise an invoice on behalf of vendors many times. For them to put in HSN code of 3 lakh, 4 lakh SKUs into the system in next 3, 4 months, 6 months is a Herculean task. So why do we need this HSN code at a retail level? Is another thing which government should seriously consider. I mean, at a manufacturing level where the B2B supply, when I'm getting credit,
Right.
I understand classification issues, etc., etc. But at the retail level, where it goes, when manufacturer has sold it to the distributor has sold it to the retailer, now retailer is selling to the end customer. There, what is the logic of having an HSN code?
Do you see any logic, sir, in this HSN code at the retail stage?
I don't know, unless it is linked to the input credit adjustment issue.
That is B2C.
Because
Yes,
B2B, similarly B2C also, again there's a credit is taken.
right. Right.
Only the consumer doesn't get the credit, but
Right.
the B2C also, the B part, he takes the credit over. So in case we need to, then issue later on that you have taken credit for something else against this.
So before we wrap up the episode, let me take a view on GST rates. I mean, that is going to be the major issue where there are a lot of speculations that probably the 3 days are not enough for the GST Council to arrive at some kind of consensus. How do you look at, Pratik, on the GST rate thing? What is your wish also?
No, I think 2 or 3 days will not work to start with. I think Revenue Secretary recently said that there will be multiple rates.
Yes.
Now there are talks about various rates, which is nil, 10, 12, 16, 25.
Right.
I think that's the way to go about it. Now you can debate whether 10 should be 10 or 10 should be 8, etc. But
Right.
But a lot of things today attract an effective rate of tax of 5-6%. To move it to 12% will be inflation.
Yes, absolutely.
Move it to exemption will mean revenue loss.
Right.
Things like food products, oil,
Yes.
edible oil, rice,
Lots of
etc.
essential items.
A lot of things 5% to 12%. So I think they need to look at multiple rates, and that's the reality of it.
Right.
After few years, gradually they should move to a single rate, but that will take a while, to my mind. And most of the food items, or where they have a high weightage in the consumer price index or WPI, they should look at having a concessional rate. Now 10% rate should also be looked at for few sectors, for example aviation, for example real estate. Wherever there is an end consumer interface, they should look at it as per rate. The only challenge I see in this model is that if they have a 25% category, the temptation of the government would be that shift most of the products to 25.
Right.
And then 25 effectively becomes an RNR. And that is the only temptation that they have to resist. The 25% has to be looked at very selectively.
Selectively,
and the remaining should fall under 16.
Right.
That's the only challenge I see. And I also think that this model will have a greater acceptability by the states. I don't think the 12 or 18 model will work.
Yeah, absolutely. Mr. Sridhar.
More than the rate, since Pratik has very exhaustively covered, I am more interested on this concept of band, the word used in the Constitution Amendment Act of the band.
Right.
Now, if you give X as the width of the band, then I have an arbitrage between the lowest point in the band and the highest point in the band.
Right.
Now, a state can still differentiate itself from its neighboring state.
Yes.
By being on the lowest and allowing the others to come up on the highest, or somewhere between.
Correct.
Now, how are we going to control that existing arbitrage? If you want that arbitrage not to be, used, then only the vision of the Prime Minister will be realized. You're making ease of doing business, and you're also ensuring one nation, one tax. Even that arbitrage, so the arbitrage has to be less. The band should be, the width of the band should be less, and then there should be I agree, the GST Council's views can only be recommendatory. Those bodies, the legislature bodies and the parliament is definitely sovereign enough to decide what they want.
Right.
But the point is, if they start distinguishing then also, then how are we going to bring about that uniformity? So what the council is going to do to bring about that discussion on the bands, so please be on this point in the band.
Right. Okay.
I think I would look at that scope, because much has been said by Pratik on that.
Right. Absolutely. Yes. What is your take on this, sir?
See, I feel that because they have said that there will be no exemptions, so we need not unduly worried about the rate being too high. 18% has been recommended by the Chief Economic Advisor. I think it should not go beyond 18%. Maybe, of course, some states are saying it should be 22%. But with this stipulation that there will be no exemptions, so 18%, and then the other merit goods, and some demerit goods will go to higher, maybe 35, 40, whatever it is. And then with the fewer exemptions, revenue neutrality will be maintained, and revenue, the fear of loss of revenue should not be there. The other point which Sridhar has mentioned about the band, now this is again a compromise, because ideally there should not be any band
at all.
There should not be band at all, because once you are discussing,
yes, sir.
But because of the sensitivity of some states to particular items, some state is interested in X item, another state is interested in Y item, because sensitive to their this thing. So that's why this provision I think has been kept. But I agree, I cannot disagree with you that the band should be as narrow as possible.
Right, sir. So on this note, sir, let me thank all of you for this wonderful insight and good suggestions for the GST Council from India Inc., of course, and other stakeholders. So it's very important that the goal of ease of doing business should not be missed. Of course, the policymakers, it's for the first time they are going ahead with this kind of massive reform, and the deadline is very tight for them. I can understand, for them, with the Prime Minister focusing on 1st April 2017, one has to move ahead. The technical committee, even for the GST Council ministers, the finance ministers of various states appear to be under tremendous pressure that they have to keep pace with what is being debated and discussed in the council. But the compliance side, the rules have been finalized by the GST Council. There are quite a few points which we have discussed, like a state-wise PNLA, it's going to add to the cost. We have to look at that ease of doing business. The another point, of course, the band side, which is a very tricky issue. As a compromise, it went to the states. Probably in the coming, as Mr. Pratik rightly suggested, that it should be conditional. It may be for a few sensitive items. Otherwise, maybe in future the goal should be to disband the band. That should be the motive. Another important aspect is the GST rates, as 18% suggested, and the exemption gone. Naturally, the main goal of the GST is going to be the binding the tax base and the seamless credit. Here, with exemption gone, the tax base is getting enlarged. Probably the center could think in terms of, or maybe the GST members, having a multiple tax rates and the lower than 18% perhaps. It's more desirable to go for 16%, to start with a lower rate and see how it works out after 1 year, whether it is inflationary or not, which is being feared largely. Globally, it has been seen that GST, the moment you switch over to a new system, it is inflationary in the beginning, maybe for a couple of years. So if you start with a lower rate, perhaps this will do better to the exchequer's interest. Keeping in mind all these aspects, I'm sure the policymakers, the GST council makers, the council members are going to take into account all these suggestions coming from various corners of the country and do best for the nation in the national interest, including the services, where both the central tax administration and the state VAT officials, their strengths should be leveraged to do well and to provide a very effective tax administration for the taxpayers in the economy. Thanking you all for watching TIOL Tube.